but governments and central banks around the world pursued policies that contributed to a huge global boom in credit. Investors and banks took risks they did not understand. Individuals, businesses, and governments borrowed beyond their means, and the rewards that went to financial executives departed from any realistic appreciation of risk. There were systematic failures in the checks and balances in our system by boards of directors, by credit rating agencies, and by government regulators. And these failures, not just here in this country but around the world, helped lay the foundation for the worst economic crisis in generations. And when the crisis began, governments around the world were too slow to act. When action came, it was too often late and inadequate. Policy was behind the curve, always chasing the escalating crisis. The dramatic failure of some of the world's largest financial institutions caused investors to pull back from taking risk. Now, last fall, as the global crisis intensified, you and your colleagues acted quickly and courageously to provide emergency authority to contain the damage, authority that your government did not have until you acted. And your government used that authority to help pull the financial system back from the edge of catastrophic failure. Now, those actions were absolutely essential, but they were inadequate. The force of the government response was not comprehensive or quick enough to withstand the deepening pressure brought on by a weakening economy. The spectacle of large amounts of taxpayer assistance going to institutions that were at the heart of the crisis, with limited transparency and oversight, added to a deep sense of public distrust. And that public distrust turned to anger across the country as boards of directors at some institutions, not all, but at some institutions, continued to award rich compensation packages and lavish perks to their senior executives.